What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is March 15th of 2024. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I want to spend some time to not only talk about Bitcoin's harsh correction over the last 48 hours from its new all-time highs around 74K down towards around $65.5 thousand in a matter of just 2 trading days, cutting back the last few weeks of gains in Bitcoin. And I want to dive deeper into talking about some of the signs of fraud, the signs of FOMO and overvaluation that we're experiencing at the moment that could very well signal that we're due for a healthy correction when people are least expecting it. I'm not here to be a perma bear by any means. I'm just here to keep everyone rational and to give a fresh perspective, very different from what you're probably hearing from a lot of other people. We got a lot to uncover in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to spend some time to talk here a little bit about price action, because not only has the price action drop we saw been relatively significant, it was coming up on nearly a 10% drop in Bitcoin's price, but outside of that as well, we need to consider the fact that if we take a look over the last couple of months and align with our moving averages that we're watching, right? So we have kind of 2 pairs of moving averages. We have our longer term ones, which are usually on the daily time frame, the 21-day moving average pocket. We also have the 100-day pocket, as well as the 200-day pocket and the 200-week. But when it comes to momentum, when it comes to serious upside movements and trying to figure out when there are potential swing opportunities where the trend is getting exhausted or it's a time to just continue riding the wave, essentially we like to watch what's known as the 4-hour EMAs. And we watch the 9 MA on the 4-hour time frame, the 21 MA, and the 50 MA. Now, these are what we utilize for meme coins. We use them for altcoins because this comes from traditional markets. These are utilized by momentum traders in traditional equities. And you can see just how relevant these moving averages are in determining, especially that 50 MA, on longer term trends. Bitcoin, for example, has either held right on that 50 MA or bounced strongly off of it every single time. However, something very different has played out here over the last 24 hours. Just in the last few hours, we have seen a snap below that moving average. And because of that, we need to pay attention. While we definitely have seen some recovery in price here, about a $2,000 move back up, we need to consider that it may be high time to start preparing for a broader correction to the downside. And to consider that what we've seen so far from these relative highs down to the relative lows, around 11% correction, is probably just the beginning of a broader shift to the downside. Now, I'm not here to say, guys, that I'm ditching the idea of potential altcoin cycle. I'm not ditching the idea that Bitcoin could continue climbing higher over the next couple of months throughout the year. All I'm here to say is that even during bull markets, you are going to get 20, 25, 30, 35%, and even sometimes 40% corrections when you least expect it. And that's the unfortunate thing that is going to wreck a lot of people and leave you making some really bad decisions if you don't plan ahead and look out for those signs. So I'm not here to be a perma bear. I'm just here to let you guys know that, after making the kind of move we had since just January particularly, I wanted to highlight this here, right? We had a great move from here in September of 2023 all the way here towards January of 2024. And take a look here, right? 94% move followed by a 21% correction. And just cutting up basically a month and a half worth of gains, right? And even after that, we went on 91.65%. So I'm not here to sit here and say that we can't continue climbing higher and do phenomenal. What I'm here to say is that in the near term, though, I would expect a correction down to some of these significant levels where price was retested in the past, areas where there was prior demand. Back here, for example, at around $60,000, which is near a 20% correction, or down here at a 30% correction, around $51,000 going into the halving event. I think that a lot of people are expecting a correction post the halving event. I think a lot of people are not expecting a correction right now. And as we have learned, as markets have evolved here, it has become growingly likely that is what is not expected by the broader crowd of traders, right, is likely going to play out. So this is just already one thing I think to consider the price action. It would not be crazy considering we've had one of the biggest substantial breaks. If we have a daily close below this 50 EMA on the 4-hour time frame, and we don't recover, and we continue to roll over, this is going to be your sign of a broader correction to the downside. It's just something to be made aware of. It might be a better range for you to average in if you're a long-term holder. If you are swing trading, you need to be watching for these signs. You can't fall in love with your positions and say, oh, you know what, I bought here and and I don't want it to go down, or maybe it'll bounce back up and then I'll get out. No, you have to be really sticking to your principles here. So for me, I'm going to see how price reacts here to the 50 EMA today. right? We've got a nice rebound here in the hourly, really nice recovery here off of the lows. And so far it's trending nicely on the current time frame. But I'm going to see what happens when we get up towards these prior resistance ranges here, like the midday ones at around $69,000, here at around 69.5K, right? If this starts to become resistance and these shorter term moving averages keep diving down, it's a clear sign that the trend is shifting in the near term. We got to listen out for those things. But beyond all that, let's take a look at the things that actually, give us details outside of price action, right? First off, ETF inflows, right? People think, Nick, you're playing a fool's game here trying to bet the Bitcoin's price is going to go down because the ETF just is the infinite money glitch for Bitcoin. There is no Bitcoin going down substantially or having healthy corrections because institutions are buying en masse. Well, those inflows need to be maintained. And on top of that, as we've talked about here, guys, as prices go higher here, this is a general knowledge point of all market cycles. We may say that, oh no, everyone's just holding and buying for the long term. There are traders who own Bitcoin. There are people who own them for much shorter periods of time. And it's a noticeable amount of supply, right? While it is slower in smaller amounts over time, which are why the corrections aren't as harsh as they used to be, there are still people who just hold and swing the short term. And when you have prices move higher, the amount of Bitcoin that comes back onto exchanges, the amount of Bitcoin that starts moving on chain, all indicative signs of people adding liquidity to the exchanges and potentially selling. That picks up. So what you need is a higher amount of ETF inflows. But what we got here yesterday was really quite abysmal. Now, sure, if you look at just the new ETFs, the numbers still look pretty good. 5,000 from the IBIT ETF. You see, for example, a couple other ETFs pulling in over nearly 150 to 100 BTC. But if you really are being fair and you're considering the outflows of GBTC, which are keeping quite consistent here in the thousands, we had a net overall addition of around 1,900 Bitcoin. And it's not terrible. It's not an outflow, net outflow, but we are seeing here a massive slowdown versus the last couple of days. So this could be a sign of trend exhaustion in the near term. That right now, institutions are not looking to buy en masse at current price levels, at least up here in the $73,000 to $70,000 range. And that could prove to be a point where more market sell-side pressure starts to come in. The price action is descriptive of this right here. The fact that when we came down to the 50 EMA on the 4-hour time frame, we bounced up and we weren't able to hold against the 21/9 EMA on the 4-hour time frame with a harsh sell-off and rejection. That is your sign that we might be ready for a healthy correction. We sent out an alert as well to the Dash Report group. We closed out of our XLM trade. At the end of the day, while we didn't really make much money on it, we realized that this is a trade in which, while it might have a great setup, we realized that there were clear market signs yesterday that started to warrant this concern. There was too much money being made in meme coins. We made phenomenal returns over the past couple of weeks, and a lot of different plays, Meme AI, Poo, as well as Moncoin, that were all three successful trades, some more successful than others. But the point is that we made a phenomenal round of returns. As we've talked about in this channel, you can come back swinging during an altcoin cycle or when altcoins really start popping off, right? And if you're in the right narratives, you know how to trade them. But while we made some phenomenal returns, I always have a cautionary side of me that says, okay, when I made some really great returns, like stupid money in a short period of time, I gotta step back. I gotta go into Bitcoin. I gotta go into cash and wait until I get some better setups and wait to see whether or not the market's going to hold. I'll give an example of this. This is stepping a bit outside of crypto. Taking a look at MicroStrategy. If you've been on Twitter or X as of recent, you've probably heard a lot of people talking about MicroStrategy. Michael Saylor looks like a genius now because Bitcoin is trending up and it's above his average again where he entered. And the big thing that a lot of people haven't noticed, but some people started talking about on Twitter, is the premium that people are starting to pay for MicroStrategy shares versus Bitcoin's price. Now, we've talked about the MicroStrategy Bitcoin premium for some time, but what you're seeing right now, I think, is an example of irrational exuberance. You're seeing a massive short squeeze because a lot of people were shorting or betting against MicroStrategy. It was one of the ultimate entrants you could take if you wanted to bet against Bitcoin, as they had a huge leverage bet on Bitcoin, monetizing their revenues as a business. But the point I wanted to say here is that the premium since back in January has risen by 123%. If you wanted to put it in perspective from the relative highs back in December, January, that premium is up now about 60%. So this is about as high as where we were back in February of 2021. Okay? And I understand that, people will say, MicroStrategy, their liquidation price is so low, yada, yada, whatever, they're never going to get shut down. I'm not here to say that MicroStrategy is going to zero or anything like that, guys. I'm not trying to be ultra bearish. I'm trying to say here that the price premium here tells you a lot. In the same way it told you a lot when MicroStrategy versus Bitcoin was trading down here at a much lower level. In fact, to just kind of put it in percentage terms, was trading at a 77% discount versus Bitcoin's price at the time from where it is now, right? Back in May and June of 2022, when no one wanted to buy Bitcoin, when Bitcoin looked terrible. So these things do tell you a lot about market sentiment. And I'm seeing a lot of the people on X and Twitter, I'm not going to name names, right? In the same way that we might have gotten a bit too bearish in the past, I'm seeing a lot of people, if we're being fair here, a lot of people who were bullish, and probably rightfully so. They made a lot of great money over the past couple months. They were ahead of the curve on the trade when many people like myself were a bit more skeptical, a bit more cash. I'm seeing a lot of those people get irrationally exuberant, buying call options on MicroStrategy, betting on the short squeeze getting higher, continuing to bet on the irrational exuberance. And that will leave you getting burnt if you aren't in check with your emotions. If you are going in and falling in love with your positions, it can leave you badly burnt. And when people are least expecting that Bitcoin will correct, it can come back and bite you in the knickers. They can do that. It will come back and bite you right in the rear end when you're least expecting it. And I only say that to you guys here because I know a lot of people want to start making trades on altcoins. They want to start making trades on Bitcoin and getting in and having some kind of piece of the pie. And look, guys, to be honest, altcoin dominance is holding up phenomenally well here. Again, every single time we've been dipping below the 50 EMA on the 4-hour time frame, we usually recover. This was one of the more harsher ones, or the furthest distance pullbacks since back here on March 5th. We're going to see if this continues to play out here. And if you do get a setup where while Bitcoin is starting to flush down and altcoins are like kind of holding up and starting to trend higher, that could be your indicative sign of an altcoin cycle, or like the later stages of an altcoin cycle. I think we're warming up into it here. The fact that we are seeing dominance hold out here relatively close to the December levels and not facing such a harsh correction like we saw in January, that's a great sign to me. Every time we've dipped here, buyers are bringing it back up. Dominance is continuing to rise week by week, slowly but steadily. And you certainly got the longer term upside for that to play out in a broader, kind of Bitcoin bull market or a broader rally to the upside. So I'm not here to say we're completely tossing that out the window, but the key thing here is that Bitcoin is, at the end of the day, the dominant weight of market capitalization and value in the crypto space. It drives direction. And until we really see that huge breakaway in others' dominance versus Bitcoin, we have to remain cautious. I've talked a lot extensively about watching the 14% mark because you've got prior resistance back here in August of 2022 and the two levels obviously here around 13.5. If you can get a good weekly close about 14%, that's when you know the mania is nearly secured, things are going to go crazy, and you can probably have a good couple weeks to make even more ridiculous returns where things are going to get more and more irrational. One thing I wanted to say is that if you guys are looking for a place to trade a variety of cryptocurrencies, if you're looking to do it in a decentralized fashion, and on top of that, if you're looking for an alternative layer 2 play in the crypto space that could be a part of that others dominance in the market, those smaller mid-cap plays that are more kind of higher risk, higher reward bets in the long term that could actually really make multiples of scale versus a lot of the overvalued layer 2s like Optimism and Arbitrum, as well as so many other players in the market that are the current center focus, I would definitely put your attention towards DeGate. Now, if you guys didn't see, we did a dedicated video on DeGate, which I highly recommend you guys go check out. Essentially, DeGate is aiming to be the on-chain layer 2 order book for all cryptocurrencies and all core trading activities. It is aiming to be essentially the Uniswap that provides the traditional centralized exchange experience with all the same features and functionality we love about centralized exchanges versus automated market makers like Uniswap, but being able to do so in a trustless and decentralized fashion. It is one of the most secure layer 2 DEXs out there in the crypto space. And if you want to learn about some of the securities and audits and how the protocol stands out versus the competition and how it actually approaches deploying the protocol in a trustless fashion, I definitely recommend you guys read the security documentation. That is always going to be number one. if you guys are putting substantial capital in the crypto space, and if you're engaging in the DeFi sector, to understand the security parameters around each protocol you're engaging with. But DeGate has definitely got one of the best platforms if you guys are looking to trade a whole range of cryptocurrencies or altcoins in a decentralized fashion. They process millions of trades on the platform and have over $71 million in TVL locked, but beyond that as well, have some of the best security parameters that I found on any decentralized exchange. And I've learned that the trustless and most secure DeFi protocols are usually the ones that lead out in the long term because they solve for the trust factor that we used to have to lean into when relying on centralized exchanges. So hats off to the DeGate team and continuing to deliver on awesome innovations as they've been around over the last couple of years. And I definitely think this is one for you guys to keep on your radar. But going in here to closing on the topic of altcoins, I think again it's important to understand the nuance of altcoin cycles, and more particularly where I think we're really going to see a lot of the value creation. And a lot of it is going to be probably in the small and mid caps, guys. The reason being is that a lot of the altcoins that are in the large cap category, I'm talking about ETH, I'm talking about BNB, I'm talking about Polygon, a lot of these plays that are already multi-billion-dollar plays in the crypto space, we are not only seeing relatively weak price action against Bitcoin, just kind of holding up here since they'd had a substantial correction over the past year back in 2023. But beyond that as well, we're not seeing the kind of multiples that we're seeing in a whole range of other plays in the market. The narratives in which we've talked about here in this channel, like Bitcoin infrastructure and meme coins and decentralized physical infrastructure networks, you've got to have your eyes on the prize. You've got to be in narratives that people are genuinely interested in, or in ranges where, again, you're going to see historically a lot of buyers coming in. We don't know if Ethereum is going to hold here because over the long term, it's broken its longest term line of support since back in December of 2016. That's a huge line of support that's been broken. And I think it sends a signal at the end of the day, a shift in the trend that the traditional EVM giant here, the Ethereum virtual machine or Ethereum, may very well be on its last leg. And just because Ethereum might be going up in dollar terms and keeping up with Bitcoin doesn't mean that it's the protocol you should be allocating your capital to. I say that as someone who's a big fan of Ethereum over the last couple of years, big fan of DeFi. There's just not much innovation going on there. And if your only bet is EIP 1559 and proof of stake making these currency supplies slightly deflationary, that is no guarantee that the price has to continue going up. It sounds nice. It's something that people like us can look forward to. It does help with price. Doesn't mean that there aren't going to be more market sellers than more market buyers, which will drive prices lower if that plays out. So keep your eyes on the prize on the right plays, guys. Watch those moving averages. Don't fall in love with the narrative of a play or the fundamentals of a project. Focus on what the market is paying. Focus on that market order flow, the price premium people are paying, and how the price is trending versus the competition. That's all you should care about here when we go into an altcoin cycle. Things are going to get growingly irrational if that plays out. But coming back here to center on the near term, as we can see here, while we've got some great rebounds here on Bitcoin over the last hour, again, it's a question of whether or not we're going to be able to get above those moving averages. It will become a more and more difficult fight for Bitcoin to do that the longer we wait. So have a great day, guys, wherever you are. If you enjoyed this video, consider dropping a like. And if you guys are interested to get the alerts for our newsletter group, you guys can check out the link down below in the description. It's the Dash Report link under my website. It's a great way to support the channel. You guys can get 20% off if you sign up on an annualized basis. We've got hundreds of members across the world who are part of the Dash Report community, so you can join the Dash Report discussion group, chat with them, exchange ideas. And outside of that, you guys will also be able to join our mid-month webinar, which is actually going to be later on today. So if you sign up in time, you can join in for that. And if you miss it, you can always replay the webinar recording as well. But there's a whole range of value that we offer within the Dash Report. I'm constantly trying to add more value to it. But if you guys would like to do that, support the channel and get some awesome additional content, you can check out the link down below. And again, get 20% off on an annualized basis. Thanks so much, guys, for tuning in. As always, I hope you have a fantastic day wherever you are, and I'll see you all in the next video. Take care, everyone.